As of this exact moment, the market is closed, but the last official closing price for Datavault AI Inc., ticker symbol DVLT, stands firmly at $2.55. That figure represents a massive single-day surge of nearly 46.5%, driven by a volume of over 139 million shares exchanging hands. This is not just a small blip. This is the kind of aggressive, high-velocity movement that forces everyone to pay attention. If you are watching the after-hours tape, you might see slight fluctuations, but that 255 close is the undeniable reality we are working with right now. The expectation for a stock trading under $3, formerly known as Summit Semiconductor before its massive pivot, is usually low. Most investors look at a chart like this and expect a pump and dump, a fleeting moment of excitement driven by retail hype, or a singular press release that fizzles out by the following Tuesday. You see a company shifting from audio technology to AI and data valuation, and the cynical part of your brain likely screams trend chasing. That is the expectation, a hollow shell riding the coattails of the artificial intelligence narrative, destined to crash back to 50 cents when the adrenaline wears off. But here's the reality, and this is where you need to lean in. Datavault AI is not just throwing buzzwords at a wall. They are executing a pivot so aggressive and mathematically specific that they have raised their revenue guidance for 2026 by nearly 400%. We are not talking about vague hopes of future interest. We are talking about a contracted, tangible pipeline that management believes will generate over $200 million in revenue within 2 years. When a company with a market cap sitting around $700 million suddenly outlines a path to that level of cash flow, the gap between penny stock speculation and fundamental growth repricing begins to close rapidly. The market is scrambling to figure out if this is the next major breakout or a trap. And today, we are going to tear apart every single data point to find the answer. Let's look at the immediate catalyst that sent this stock vertical. On Friday, the stock ripped higher, fueled largely by the announcement of a meme coin dividend. Yes, you heard that correctly. Datavault AI is distributing Dream Bowl 2026 meme coins to its eligible equity holders. On the surface, this sounds like a gimmick. It sounds like something a company does when they have run out of real ideas and want to court the crypto crowd. But look deeper. This is a strategic stress test of their Datavault Wallet infrastructure. By forcing shareholders to opt in and set up a digital wallet to receive this asset, they are forcibly onboarding thousands of users into their proprietary ecosystem overnight. It is a user acquisition strategy disguised as a shareholder reward. While the meme coin headline grabbed the retail eyeballs, the real story, the one that the institutional algorithms are likely chewing on, is the partnership with Triton Geothermal. This is where the rubber meets the road. This isn't a theoretical partnership, it is a signed agreement where Datavault will tokenize real-world assets. They are securing an upfront fee structure that could reach $8 million, but more importantly, they secured a 5% participation stake in future transaction fees. This is the real-world asset, or RWA narrative, coming to life. If they can successfully tokenize geothermal energy assets and create a liquid market for them, the recurring revenue stream from that 5% cut could be massive. This is what separates a tech demo from a business. They aren't just selling software, they're taking a cut of the economic activity flowing through their pipes. Now, let's talk about the trading action itself. The volume we saw, nearly 140 million shares, is multiples of the outstanding float. This means the entire ownership base of the company effectively turned over in a single session. When you see that kind of churn combined with a 46% price increase, it indicates a violent transfer of shares from weak hands to aggressive buyers. However, it also invites immense volatility. If you are trading this, you have to understand that DVLT is now a battleground. The shorts who piled in when this was just a struggling semiconductor company are now underwater, staring at a massive potential margin call if this momentum continues. Speaking of momentum, we have to look at the broader context of how retail investors are accessing this trade. Whether you're using a Fidelity trading platform or managing your own risk through a Robinhood stock trading account, the accessibility of these small-cap flyers is never been higher. Years ago, you would have to call a broker to buy a stock like this. Now, someone sitting in a coffee shop can pull up their Fidelity mobile app or swipe through the Robinhood app and take a position in seconds. This speed of capital entry is what causes these vertical moves. We see similar flows in major names. When Tesla stock or Nvidia stock starts to run, the retail army mobilizes instantly. But with a stock like Datavault, which has a fraction of the liquidity of an Apple stock, that influx of retail capital acts like rocket fuel. It is critical, however, to remain objective. We are seeing a lot of excitement on forums discussing Robinhood investments and SoFi investing strategies, but you must separate the noise from the signal. Is this company essentially the next Palantir, or is it a short-term trade? The company's history is a major factor here. They were Summit Semiconductor. They did wireless audio. That business was tough. The pivot to Datavault AI is a complete reinvention. They are now claiming to use AI to value data assets, essentially telling companies, we can tell you what your data is worth and help you sell it. In an economy obsessed with large language models and data training sets, that is a very attractive value proposition. Every company, from the massive conglomerates down to small firms, is sitting on terabytes of data they don't know how to price. Datavault claims to have the formula. The skepticism comes from the execution risk. Can a former audio tech company essentially become the Moody's of data valuation? The raised guidance to $200 million in 2026 suggests they have signed contracts, not just handshakes. If those contracts hold up, the current share price of $2.55 is laughably low. A tech company growing at that rate usually commands a revenue multiple of 10 to 20 times. You can do the math. If they hit $200 million in sales and the market gives them a standard software multiple, the market cap should be in the billions, not millions. That is the bull case that is driving this frenzy. But we have to talk about the risks. Insider selling has been spotted. The CEO sold shares recently. Now, executives sell for many reasons. Tax planning, buying a house, divorce, but it never looks good when the stock is ripping and the captain is offloading cargo. You need to watch the filings closely. If we see continued heavy selling from the C-suite while they are issuing these bullish press releases, that is a massive red flag. You don't want to be the one buying when the insiders are exiting. Furthermore, the meme coin distribution creates a complex technical event. November 25th is the record date. We often see stocks run up into a record date as traders buy to qualify for the dividend, only to dump the stock the moment the date passes. This is a classic buy the rumor, sell the news setup. If you are holding DVLT right now, you need to ask yourself, are you here for the long-term data valuation story, or are you just trying to snag some free crypto tokens? If it is the latter, be very careful about the drop-off that might occur on November 26th. Let's shift gears to the macro environment. We are in a market that is starving for the next big thing outside of the Magnificent Seven. Investors are bored with the slow grind of traditional sectors. They are looking for asymmetric upside. This is why we see high engagement on platforms like SoFi Invest and searches for interactive brokers stock trading exploding for these types of tickers. People are hunting for volatility. They want to find the next name that can do what Supermicrocomputer did before its correction. Datavault fits that profile perfectly. A low price, a high-tech narrative, and a massive projection of growth. But how does this compare to the big players? Think about how Schwab Intelligent Portfolios or Fidelity Wealth Management Services structure a portfolio. They are usually heavily weighted towards safe, boring indexes. They are not buying DVLT. This is a purely speculative play for now. It is not investment grade yet. It is a venture capital bet that happens to be trading on the NASDAQ. You are betting on the management team's ability to pull off a massive pivot without running out of cash. Speaking of cash or capital, let's discuss their balance sheet. Expanding into a new sector requires funding. They have raised guidance, which is great, but do they have the liquidity to reach 2026 without massive dilution? Small-cap tech companies are notorious for secondary offerings. They see their stock price jump 40% and they immediately issue new shares to raise capital, diluting existing shareholders. If you are using a Fidelity brokerage account or trading via Interactive Brokers platform, you need to be aware that a secondary offering could drop the price overnight. It is the sword of Damocles